Hello everyone. Today we are going to be looking at US 100. And for this one, I want us to keep things very simple because price has just moved into an area that could tell us a lot about what buyers and sellers are trying to do for the rest of the week. To start with, the 4 hours time frame shows that buyers had been maintaining a strong recovery from the end of July into the middle of August. And when we connect the series of higher lows, we can see this ascending structure carrying price gradually towards the 30,200 area. But once price got there, buying pressure started to fade. Around the same period, the US dollar and broader risk sentiment were also reacting to weaker retail sales, while rising oil prices and US Treasury yields were bringing inflation concerns back into the conversation. So there was still some support for technology stocks because expectations of another immediate Fed rate increase had reduced. But as yields started pushing higher again, buyers also became more cautious, and that hesitation is exactly what we can see happening around 30,200 during the first trading day of the week. So price failed to extend beyond that area, and with some profit taking likely coming in around the highs, sellers became more active, and eventually we saw a breakdown below the ascending trend line and the 29,850 support. Now 29,850 appears to be my key level for the remainder of the week, and if you look back across the chart, you will see why. This area has played a significant role in determining the direction of price action over the past couple of weeks. At one point, it acted as resistance, as you will see here. Once buyers broke above it, the same area started behaving as support. And now, price has broken below it again. So when we look at how price has behaved around 29,850, we can see why this level matters going forward. Now, when we scale down into the 1 hour time frame, I want you to pay attention to what price does around this level, because this is where we can start separating a genuine bearish continuation from a possible false breakdown. Look at what happened after price tested 30,200. We can see buying pressure weakening, followed by the break below the ascending trend line and the 29,850. Price is now trading underneath that former support, while 29,500 gives us the next obvious area where buyers may start responding again. So going forward, this is how I will be reading it. If price returns to 29,850 and sellers continue defending the area from below, that tells us the breakdown is being respected. In that case, attention can remain around 29,500. But if buyers recover back above 29,850 and then hold the level after a retest, we will have to consider the possibility that this was a false breakdown and that buyers are beginning to take control again. Now, there is another layer to all of this. The Fed minutes is coming out on Wednesday, and traders are definitely going to be looking for clues about how policymakers are thinking about rates after the recent soft US data. We also have major retailer earnings and more economic data coming through during the later part of the week. And remember, price does not have to wait for the actual releases before moving. In fact, market participants can begin adjusting their positions based on what they expect those events to tell us about growth, inflation, and interest rates. And that is why I am paying particular attention to how price behaves around 29,850. If sellers keep control below it, then 29,500 becomes increasingly relevant. If buyers reclaim it and hold above it, then the picture will change. And from here, the chart already gives us a simple way to read what buyers and sellers are doing at the moment. Let's see how price behaves around it over the next few days. Until we meet again, trade safely, manage your risk, and I'll see you again next week.